Hello, everybody. This is Toni Turner, and welcome to the Market Now on Friday, May 9th at about 1:30 p.m. Eastern. Well, Wall Street's main indexes are rising today, marking their third straight day of gains as investors assess fresh comments from President Donald Trump regarding tariffs on China ahead of a key weekend meeting between the two countries. And on that note, let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, today when I captured this chart, the SPY was trading at $563. See, right over here's the price, $563.64. That's about 56.36 on the S&P 500 index itself. The SPY is still trading just below, 8% below its recent all-time closing high back here in February 19th at $612.93. Now, if we look down to our price action here again today, the SPY is still trading above, thank you, look up and say thank you. The SPY is still trading above the green line, the 50-day moving average, which is coming in here right now, excuse me, at $553.52. It is trading above the red line, the 20-day moving average, which is headed higher here, trying to get back over the 50-day, not there yet. The 20 days coming in at $546.68, but we're still below the 200-day moving average. That's the black line along here, which is coming in at $573.26. So we'll move that off, round that out to 573. So in looking at that, if we take a quick look back at our all-time closing high back here in February at $612.93, we know that after moving up for about a year and a half, moving up most of the time, it happens. We have to, the stock market has to take rests now and then, and it certainly happened this time. So from that all-time high up here at about $613, we know the SPY rolled over and fell down here to a March low down here at $549.68. It rallied, it fell through all its moving averages, then tried to rally back up in March and get back over the 200-day moving average. It got over the 20-day for a couple of days, not long. It tried to get over the black line, the 200-day moving average, couldn't do it. Tried to hold here at 560, but could not, then fell down pretty dramatically. And of course, that's when all the tariff news started, down here to the April 7th low at $481.80. Then rallied fast, bounced up here on April the 9th, came up, tried to get over the 20-day and couldn't. So it rallied up on April 9th to 548.62, then pulled back here in April to 508, then rallied back up, actually moved back over the 20-day, and last week moved up over the 50-day again to where we are now at $563.64. Now, at this point here, we can see that price is kind of caught between. It's standing on the curve looking both ways, or I should say looking up and looking down. It's caught between the 50-day moving average, again coming in at 553.52. I'm just going to round it out to 553. It's caught between this line and the 200-day moving average. And it's going to be important next week to see which way the SPY can, if we've got enough buyers to push it up over this resistance line here. If it can climb up over this and stay over it for, say, 3 days, close above it, that will be a very positive achievement. So we can, if we look left here, what do we have going on? We've got potential resistance here at 573 with the 200-day. Then if we look left and remember that a price pivot was created here at about 560, or I'm sorry, 576 I meant to say. So we have here both potential price resistance and moving average resistance. So that can be a tough ceiling. It may not be, but at the moment that could be a tough ceiling. And you say, why is resistance so important? Well, if you think about it, people who bought in this area, people who bought the spot, we'll call it the SPY here, or the market if the price patterns resemble each other, people who bought here ended up losing all the way down to there if they didn't sell, and down to 481 or so. And so what happens is the next time price climbs back up to about where they got in, and even if they bought higher, they say, okay, next time we get back up to where I bought, I'm going to sell and at least I'll break even because I know what can happen. So that's why there's price resistance. There will be sellers coming in at some of these points. And of course, it remains to be seen whether the buyers or sellers are going to win. Excuse me. If the buyers win, price will be able to go back up, potentially even maybe back up to the all-time highs up here at around 612, 613. If not, we have potential support here at the 50-day moving average at 553, and we've got the 20-day moving average coming in here again at 546. We have, of course, these recent pivot highs here, so that could be a little bit see this whole area here, this low back here in March, but these highs here, so that what was resistance could now be support. We can see if that can happen. Then, of course, from there, we do have to look down, back down to this 508 level. That's a key level. Hopefully it doesn't, we don't have to look at it that hard, that it doesn't come into play. But all of this is important to look at if the SPY says, all right, I need a breather here. So indeed, and some traders who got in early here, if you know, maybe you or some traders who, if they did take a chance and get in early, down right after this April bounce here, when it moves up to this kind of congestion and potential resistance, some traders may even, if they made this gain here, they may even take some profits here, which of course is another, selling is another form of resistance. So at any rate, we've got a lot going on here. It'd be really interesting to see how the SPY does in the coming week. Our next chart today, as we always do, is a daily chart of the Invesco QQQ, symbol QQQ. Of course, this ETF closely follows the NASDAQ 100 index, which is the top 100 non-financial stocks in the NASDAQ stock market, including large cap momentum stocks like Nvidia, Meta, Alphabet, Tesla, Apple, that whole group. Now, when I captured this chart today, the Qs were trading at $486.99. Now, like the SPY, it's consolidating for this last week. We just have little tiny candles here, little candles that say buyers and sellers are about equal. So it's just kind of going sideways here for the last week. Again, caught between the 200-day moving average here on the Qs, coming in right now at $491.16. So we'll call it 491. Down here, the 50-day moving average is coming in at $471.24, so 471. And of course, the 20-day is coming in here at 467.50. So it's caught between these lines and still trading at 10% below its all-time closing high on February 19th, back here at $539.52. So since the Qs made this all-time high back here that we just said at 539.52, we know that it rolled over, much like the SPY did, back down between all of its moving averages below the 20-day, 50-day, 200-day, came down here to its March low at $466, then rallied and said, no, I can get back up, hit its head on the 200-day moving average at 494, then fell down on April 7th, like everybody did, down on April 7th to $402 down here and 39 cents. then rallied on April 9th right here to 468, smacked its head on the 20-day moving average, pulled back to 428 right here, and then gradually moved up and rallied up again to where we are now at 486.99. So as I said, like this SPY, the Qs are caught between the 200-day moving average up here, again coming in at 491, and the 20-day moving average, and the 50-day moving average, the green line coming in here at I'm going to round it off to $471. And of course, the 20-day is coming up from beneath. These two are inverted from the 200-day because price fell so hard. So what we see here is the same kind of thing. If the Qs can climb above this resistance point at the 200-day moving average coming in at 491, and of course we have this prior price resistance here from this March pivot, so we've got price and moving average coming in at the same price. That can be a tough ceiling to get over, but maybe not if we have enough buyers. So if it can get over that, it will be quite an achievement. It'd be very bullish, and I like to say if it can stay above it for 3 days, close above it for 3 days, that's usually a hint that it could possibly go higher. Then it can stay, it would be bullish, and it could, then we'll have potential resistance, but it could go back up to its all-time high at 539, 540 back up here. If we don't get enough buyers, and it's really that simple in the long run, if we don't get enough buyers here in the coming week, if the Qs start lower, we have potential support again at the 50-day moving average and the 20-day moving average, so 467 to 461, plus this March pivot back here at 467, 468. Then if that doesn't work or hold, then we're looking down here at the 428 pivot down here. That's important. And then hopefully we don't have to consider down here to 402. So at any rate, most of the mega earnings reports are in. We don't have to worry about them so much anymore. We can see more volatility in the upcoming week, of course. So please do keep an eye on your protective stops. And if the market starts down and you have some profits, maybe you take a few of them off the table. That's up to you, but that will be my plan. Because I think in the long run, we are going to, of course, go higher. Our final chart today is a daily chart of I should have put Global X on here, excuse me, the Global X Data Center and Digital Infrastructure ETF, the DTCR. It has 25 holdings. I do think that this industry group can grow. The data center industry group can grow. And that's why I'm looking at this. It has, again, 25 holdings. Some of the top holdings are American Tower, Equinix, Digital Realty Trust, Crown Castle, and GDS Holdings. And again, I give you the top 4 or 5 holdings in the ETFs we talk about in case if you want to check this out more, go to the Global X ETF website, pull up this particular ETF, and look at the top 4 or 5 holdings in it, and you might see a single stock there that you're interested in trading. So that's why I give them to you. Now, the DTCR, which is what I'll call it, is a relatively new ETF. It started, you can't see it on this chart, it started trading in October 2020 at about $15. It rose in 2021 to $19. I'm rounding these off, then fell to its 2022 lows at 11. Now let's revert back to looking at this chart, daily chart. Then the DTCR from the 2022 lows at 11 gradually moved higher. We can see on our chart right here to this February high this year, recent high this year, to retest the prior high, the prior 2021 high. It came up here to $19.49. So that was pretty cool. But as we know, when price goes straight up like this, it's tons of fun. But when we see big engulfing candle like this one, it's probably going to come back down, which it did. That's too steep of a rally to maintain for very long, but it was fun. You see the big engulfing candle, and so, okay, probably going to fall. Then it fell down to its 50-day moving average, walked along that for a while in March, below the 20-day too, then fell pretty dramatically down here, and everybody did, down to its April lows down here at 410. Then had the 3-day, what do we do now, coach, period that everybody else had. Then it rallied up pretty nicely here, back up to where we are now at $16.94. Now the moving averages, it's back over its 20-day, its 50-day, and its 200-day moving average. The 20-day moving average is coming in at $16.23. 50-day is coming in at $16.57, and we see the 200-day here coming in at $16.80. So pretty tight here. I like this rally that didn't hesitate for very long right off these lows and came back up. So in the coming week, if the DTCR can stay above $16, here's $16. I'm saying that because of when you see it moving sideways here along the 200-day moving average back in December and January, that was right about at the $16 point. So that was prior support. So if in the coming week the DTCR can stay above $16, and if the market is behaving reasonably positively, I will buy a small position of the DTCR in my trading portfolio, and I'm going to put my stop below the 20, just below the 20-day moving average at 1575. And of course, you can raise or lower your stop if you choose to get in wherever you want, but that's as much as I want to see go, here. If and when the DTCR closes above, if it starts moving higher and closes above $18 for 3 consecutive closes, I will add to my position, and my stop, of course, by then will be a trailing stop. So you may want to keep an eye on the DTCR in the coming week. And now, please know that at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible for everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless training programs. In my training program, How to Bottom Fish Like a Pro, right here, I will show you how to detect with high probability when a stock or ETF is just about to wake up from an extended downtrend and finally take off again. You'll learn how to buy low and sell high and do it over and over again. Now, our new low price for this program is only $199. And by the way, I should tell you this, some of my trainings are priced at only $59. So we've lowered the prices, and I think you'll like it. And you'll receive special bonuses when you order, including 1 month of Metastock daily charts or Metastock real-time charts for free. That's what I use. And once you purchase, you will have unlimited access to learn at your own pace. So from our ever-popular flagship product, 7 Steps to Successful Trading, down to how to swing trades successfully, certainly an all-time favorite, trade the trend to profits, one of my favorites, how to read charts, great for novices and those who want to brush up, 3 winning setups, great for short-term traders, and again, Bottom Fish Like a Pro. Find out how my online programs can help you earn more money quickly and easily. Check them out now by going to the link on this screen, or easier still, just click on the orange button below. Until next week, be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.